All right, so good afternoon. This is 28th of May, Saturday afternoon, 2:30. Our usual weekend session. In these sessions, first we'll take a closer look at the markets, Nifty, Bank Nifty, and the sectoral indices. Like last week, we'll take a look at the ratio charts. I think that was useful for the sectoral indices. Next, we will move on to discuss our existing stocks that we have included in our portfolio and what plan of action should we take on them next week, which are the ones we should trade our stop loss, exit, etc. After that, we'll move on, and I have scanned the Nifty 200 universe over the weekly time frame for fresh opportunities, long opportunities for next week, and I have one very interesting name, so that will be interesting to discuss later today afternoon, and then I'll take a look at your doubts and questions. So without wasting much time, straight away let's take a look at the chart of Nifty. Now this is going to be a slightly medium term to long term discussion because we'll be focusing primarily on the weekly chart and the daily chart. In fact, we don't mind to take a look at the monthly, but generally we do that at the last week of the month. So we'll restrict ourselves to weekly, daily mainly here. So weekly chart, we had a great run. Now we have going through a week of consolidation, correction. The 76.4, 78.6 fib confluence held this move. I am no longer a big user of fib retracements, projections anymore, but in my career earlier when I used to use them, I have found that this particular fib zone used to work very well, rather than the conventional theory which says that 61.8 and 50% are stronger levels. In fact, my observation experience was otherwise, that the deeper corrections, so this is essentially a correction of this fall, right? They generally used to get, the deeper ones used to extend towards that 76, 78.6 fib retracement. So we have a top in place as of now. We have a fractal high in place on the daily charts. There's no second thoughts about it. Our momentum indicators have started to angle on the downside for 4 trading sessions now. Short-term trend based on the daily charts have again reversed. By the way, in the month of May, the trades that we have taken in our trading portfolio are all shorts. The only long trade that we have taken from the weekly charts, we are still holding on to it. So element wise, we have slipped into a short-term downtrend with the underlying momentum still supporting it. Yesterday we got a bounce back. You will remember in our yesterday morning session, I did end the session saying that if you see a move above this high, then that might turn out to be a trap. Now, generally these kind of traps, the move come almost immediately. That did not happen. It took its own time and came towards the late hour. So I have doubts. 2 things I would like to share with you here. Number 1, yesterday's low, or you can say, Friday's low. Primarily, most of the sectoral indices will mean weekly low, and the Friday's low probably will be the same. Nevertheless, Friday's low is going to be crucial for any kind of serious selling or weakness in the market. In other words, if Monday we see some fresh weakness coming back into the market, or let's say Monday stays range bound and all of a sudden Tuesday the market breaks down. If this low gets compromised soon, then I think we should pack up all our long expectations and the market's heading seriously downside way below 18K very easily. That's on the downside. On the upside is, as long as this low holds, then the possibility of some range bound activity, consolidation, bounce back is there. And there are some evidences for that. Number 1, the 75-minute time frame will show you an M1 divergence. This is a good looking divergence, which means that it's trying to consolidate. Number 2, you've got short-term resistances close to that 18,250, 18,300 zone. So some kind of a range bound activity in this area is highly possible going ahead, going forward. And we need to see whether this range is taken out and sustained up here, or this level is broken. And if this level breaks, then I don't think it will consolidate. It will just take it down sharply. So level wise, 18,250, 18,300 zone on the upside. Yesterday's low on the downside, which is 18,050. So yes, 18,000, 1850, 18,250, 18,300. That's the level for the Nifty. Strategically, you should be cautiously bearish, because going by the momentum and trend of the market, we have been primarily going short in the market. So we continue the same view. If you remember last week, when we did take a look at these ratio charts, we clearly found sell Nifty by dollar. 1, 2, 3, 4, 5. 5 days back when we were taking a look at this ratio chart. This is Nifty and dollar index ratio, which clearly gave us a signal here that this chart is likely to come down, which means Nifty is going to come down, dollar is likely to go up, or Nifty will come down more than dollar. It's playing out so far so good. Now, it's playing out so far so good primarily because of the fact that I think that the weekly charts got some nice evidence behind it. It's at a crucial juncture this week, this particular ratio. And I think that if these lows are again broken, that is if Nifty breaks Friday's low, then further downsides will come for sure. However, the Nifty gold ratio is not suggestive of that thing. In fact, Nifty gold index had gone up, which means Nifty had done relatively better than the gold. Buy Nifty, sell gold. This pair has now created an engulfing. Now remember, this is a ratio. These things do not get traded. So all these levels and all do not matter. It's the structure of the chart that matters. Okay. There's no support, there's no resistance per se on these kind of charts which are derived from a formula. But it's the structure of the chart that we are trying to analyze. Over here, we don't see, in terms of gold, the Nifty is relatively doing better. So we cannot take out anything from this particular ratio. Now let's come to Bank Nifty. Now Bank Nifty held pretty well. If I'm not mistaken, if I'm taking a look at this Bank Nifty underlying chart, cash spot chart that is, all-time high for the Bank Nifty was 151, 44, 151.8, 44, 151.7. So by decimal point, it has missed the all-time high, and we can congratulate the index saying that pretty good bounce back. You have hit a life high. It's okay. It deserves that credit. But what's happening over here is it's slowing down. That's okay. It did not come down like the benchmark Nifty, but it's definitely slowing down. We've got enough evidences of this slowing down. You've got some M1 divergence, etc., etc., etc. It's just that the signals that we're getting from momentum is not getting reflected on the trend as of now. Will it get reflected? I think over here also a play has happened where PSU has come off, but the private sector banks have held relatively far better. Names like Axis and especially ICICI Bank. But one thing that I would draw here and keep it, that is, I always tend to have an eye for these things. They work, they don't work, but these kind of rising wedges in a rising market always brings memories of late 2007. I clearly remember when I was with ICICI Securities in those times, the Nifty had created exactly a similar looking behavior right at the top of 2007. Later on, you can go back and evaluate the chart that I'm talking about on the Nifty. Now, these kind of patterns do not always lead to reversals. Do not. They can just do anything about it. They can continue to go up. They can consolidate. But when they reverse, I'm just saying that when these kind of patterns lead to a reversal, the nature of this reversal I've seen to be very common, which is extremely sharp. In a very small span of time, a lot of distance gets covered. on the downside as well as on the upside. I think on the upside, if I'm not mistaken, today afternoon we'll take a look at it later. Oro Pharma was one chart which had created some kind of a behavior on the downside. We'll relook it. I think so. So Bank Nifty, number one, holding well. Trend still positive, momentum down. Weekly pretty strong. So element wise, there is not much of a strong evidence that Bank Nifty is weak or it will weaken, which is there in Nifty. But there is something that we should be careful about. And in that case, in this particular case also, Friday's low is like to play an important role. So if this happens, the pocket of the market which held the overall market up, which enjoys almost 40% weightage in the overall market, if that cracks, then of course that expected downfall from Nifty will be very, very easy. We don't know whether that will happen or not. It's just that we need to be careful of this fall. Which means from here on, we should not blindly chase any of the banking names. We should trade them intraday, that's okay. But we should not be very, very bullish on the banking names going forward from here on. I was talking about the ratio. Now, this was Bank Nifty. And you can take a look at we'll take a look at finance first. And then we'll go to the ratio of private banks versus PSU banks. Chart's taking a little bit of time to open. This is finance. Finance seems to have, let me check the weekly charts. I think it's come really close to its all-time high, not a problem. So finance has supported pretty well. We have early signs of a shift in the underlying momentum and trend shift. We know we have acted on this yesterday, after which it bounced back. We'll see how it behaves Monday morning. But over here also similar kind of a view coming up. The wedge over here probably is not as good looking as the wedge there in Bank Nifty. This is more like a, I would say, that's okay, not bad. Do I have a couple of touches on the top and bottom? Now I have 2 touches on the top, 2 touches on the bottom. It allows me to give this this pattern. So Bank Nifty, I think, Bank Nifty and finance are important. Now the Bank Nifty, PSU and private sector ratio, the one that I was talking about. This is the way the PSU banks have weakened vis-a-vis the private sector banks. And it's back to some levels from where every time it managed that move. So PSU banks definitely weakening vis-a-vis private sector banks. Whatever little strength we have seen have come from the pocket of private sector banks. Now let's quickly take a look at the rest of the sectors. Auto, phenomenal move we had. No second thoughts about it. Big breakdown. And I did share that typically when we get these kind of multi-week, multi-year breakouts, we generally tend to see a throwback. It should come back close to these levels for a retest and then fresh upsides. Bajaj Auto, Maruti, M&M, lot of stocks have done exceptionally well. Two-wheelers also have produced a good move. But I think that this momentum slowdown will slow down the pack as well. Recently, we just did a hit and run trade on the short side on M&M. We will be eyeing the pack. Again, Friday's low, very important for this particular sector as well. CNX IT, as it opens, so the auto view is strong bullish, but we are expecting a short-term correction. And if we play this short-term correction on the downside, then we will do some hit and run trades, 1 or 2 days, short trades, and we will not hold on to the short trades for long. IT, struggling, multi-week, multi-year kind of supports being created here. Not a very clean chart, very difficult to trade these kind of charts which keep on slipping their trends up and down. choppy. Yesterday's trade, it supported the overall markets. Our M2, which is the higher time frame momentum indicator, is supportive. I would suggest do nothing. Just let it stabilize and give us a decent trend on either direction, and then we can act on it. So IT, our view stays the same as it was last week. FMCG, phenomenal run, just like the auto, which needs a cool off, a double topish kind of a behavior up there. Momentum shift has happened, short-term trend has dropped. You've got a good looking Heiken candle here, which means that it can come off again below Friday's low. Weekly charts have taken the shape of a spinning top, long tails and long wicks, series of beautiful looking Heiken, which suggests that this sector should slow down. ITC should slow down. Hindustan Unilever had a great run up. That guy also should slow down. Upside seems to be a little capped. Downsides not much. So it's a sector it's better not to be looked into from a trading point of view. From an investment point of view, I think it's better off. Metals is something that bothers me a little bit now, because I was expecting this move, and we were talking about CNX metal and tracking it all throughout this area, particularly from this area all the way down here. And my key stock that I was focusing on was on Tata Steel, but sadly I did not get any trigger to act upon it, so that's why it bothers me. However, at this juncture, it is clearly in a downtrend. The weekly charts are weakening. The momentum is still on the downside. Decently oversold, trying to bounce back. I think it requires a bounce back after this series of fall. We will relook at this particular chart later next week when we talk from a monthly perspective. आपको याद होगा that last month's end, when we discussed CNX Metals monthly chart, I was talking about the break of monthly lows can be catastrophic for this particular index, and that view still holds. The parameters so far so good are still fairly bearish. So metal view is definitely bearish. Media is nowhere. It's extremely choppy within this entire range. I don't know what it wants to do. It did show some strength, but completely dissolved in the next 4 sessions. Weekly improving M2 is a good sign. So doesn't make sense to look at it from a short-term trading point of view, but this wedge breakout, if it happens, because this is angling on the upside, will be the main trend reversal for the pack. Till that point, I don't see any point of looking at media and media stocks for our short-term trading purpose. Pharma fell sharp. I think pharma, I had shared with you in our daily, the notes that I share with you, clearly it weakened and it fell like it just clearly took us down. Element wise, trend is down, momentum is down. But a sharp cut on the weekly time frame. It was improving, but then it has come off quite sharp. 75-minute time frame also, there's no such evidence that it wants to stop. So I think the bearishness will stay. Energy has just recently turned its momentum and trend. It's given us a small kind of a bounce back, which we call as a decoy bar. It's more or less close to its highs, which it saw in mid-April this year. So at short-term supports, but again, weak. This is not a strong chart at all. We were eyeing this, if you remember. I think we went with Power Grid this week. Power Grid enjoys a decent weightage from this space. And lastly, let's talk about real estate. The important point of real estate is, was this move a false move? It was not a breakout. It was definitely not a breakout, but was this a false move which has led to this long upper shadow? Possible, because it immediately slipped the next 3 days. Now it's back to the levels from where it gave this particular move. Momentum and trend has slipped. You've got a bounce back. So real estate definitely should be there on your radar for any kind of shorting opportunities below Friday's low. Now, looking at the Nifty, Bank Nifty and these sectoral indices, I am getting more of a confirmed, or shall I say that I'm getting more of a bearish view in the overall market, the confirmation of which will be Friday's low. In other words, if Friday's low of CNX, real estate, Bank Nifty, finance, few stocks here and there breaks, then I think we will get a pretty good opportunity to short and make some quick buck. And the confidence behind this view and the execution is pretty strong, pretty high. However, as long as the Friday's low of these indices, these sectors hold, it will, chip chop, it will stay in a range bound and probably give us a bounce back. We might get some opportunities to go long, but the degree of confidence is not that high as it is on the downside. So we'll see whether specifically the finance and the banking weakens or not. I think that will be the key going forward for the weakness, from the point of view of the weakness. And metals, pharma, those who have already come down, can they support the index a little bit? They don't enjoy a lot of weightage. But IT, can IT do a bit or not? So I think it will be far more interesting and important to focus the sectors and the top stocks rather than the index. The Nifty, Bank Nifty, the Nifty may not give us a big range, the Bank Nifty can. So accordingly, we will strategize from Monday morning. Right? Okay, so that's our take on the Nifty and the sectors. Now we'll open up the Excel sheet and update our open positions, work on the stop losses, and then I'll scan the Nifty 200 and find some opportunities for you next week.